Welcome to Impact Headlines. Global growth forecast revised upwards. Chinese economy beats growth expectations. Oil prices come off recent high. The International Monetary Fund raised its global GDP growth estimate for this year and the next to 3.2% from 3.1%, according to Pierre-Olivier Gouranchas, economic counselor and the director of research at the IMF. Most indicators point to a soft landing and the global economy remains remarkably resilient. It also expects median headline inflation to decline to 2.8% in 2024 and 2.4% in 2025, but warns of risks from rising global tensions and protectionist policies. Impact on Sri Lanka. A growing global economy is good news for Sri Lanka. The island nation is looking to boost its exports after experiencing a slight dip of 0.3% in the first 2 months this year. On a brighter note, tourism has seen a resurgence with arrivals increasing by almost 83% up to April. This has led to related earnings also to increase significantly to over $1 billion. In a show of resilience, the Chinese economy grew 5.3% in the first quarter of 2024, beating expectations of 4.6% growth. Growth was made possible due to an increase in manufacturing activity and government policy measures. However, Harry Murphy from Moody's analysts cautioned that China cannot continue to manufacture growth forever and needs to see a rise in household consumption if it wants to meet the 5% growth target. Impact on Sri Lanka. While China is not a key export market for Sri Lanka, a strong Chinese economy fuels investments. Last month, China's Sinopec agreed to double its investment in the Hambantota oil refinery to $9 billion. Additionally, tourists from the world's second-largest economy are a significant contributor to Sri Lanka's rebounding tourism industry. Crude oil prices fell from a recent high to $86 per barrel as Iran and Israel downplayed the risk of escalation following Israel's limited strike. According to Yip Xianrong, market strategist at IG, despite prices easing, markets continue to unwind existing geopolitical risks tied to supply disruptions. Moreover, markets are also cautious of potential interest rate cut delays as the United States' progress on curbing inflation appears to have stalled following 3 months of rising prices. Impact on Sri Lanka. Sri Lanka's high dependency on oil imports means higher prices significantly affects its balance of payments. While the country's foreign exchange reserves have improved in recent months, they still remain dangerously low at just around 3 months of imports. And that's the wrap for this week. Subscribe to our YouTube channel to stay updated on the latest developments in Sri Lanka.